Let me get on board LV Prabhakar, who is the Managing Director and Chief Executive Officer of Canara Bank. Thank you so much, sir, for taking the time. I want to ask you at the onset, what led to this mixed performance?
If you see the figures, especially regarding the income side, our net interest income, it has grown by 40% YOY. Now it is about 15,000 crores. Then fee-based income, again, year on year, the growth is about 19%. And operating profit, you see it is a record 20,009 crores. So as far as the income is concerned, it is very robust. And as far as business growth is concerned, again in CASA, we have done well. We have grown at 14%. Retail term deposits, we have grown at 16%. Bulk deposits, wantedly, we have reduced by 2%. And retail credit has shown good traction. It has grown at 12% and housing has grown at 15%. Regarding slippages, in Q2, Q3, because of the Supreme Court's direction, we have not allowed the accounts to slip. And in Q4, FY21, all the 3 quarters NPAs which were identified has been classified. And year as a whole, the total fresh slippages were to the tune of about 15,287 crores in March 21, including what you call the slippages under existing NPAs, and total is about 16,600 crores, which is less than last year, in spite of the pandemic issue. And gross NPA, we could comfortably maintain it 3.93%, and net 8.93%, and net NPA we have maintained less than 4%. That is about 3.82%. Even our slippage ratio, we could manage at 2.35%, and credit cost is 2.09%. So overall, I think taking into consideration the present pandemic situation, the balance sheet is very strong.
Good morning, Mr. Prabhakar. This is Cheryl also joining in the conversation. The impact of second wave of COVID-19 has been actually very severe. Are you seeing the impact on collection efficiency since the month of April? Also, what kind of rise in provisions are you expecting? And also, what will be the impact on provision coverage ratio?
Regarding collection efficiency in March, it was about 92%. And in April, we have studied the collection efficiency. It is about 88.8%. There is a dip of 2 to 3%. And yes, there is impact of the second wave of the COVID. However, if you see our results during the COVID-1, in spite of the impact of COVID-1, the results were very good, because every quarter we try to make our balance sheet strong. In the sense, provision coverage ratio as on March 20 was around 76.95%, which now stands at 79.68%, and we would like to maintain this ratio around 80%. Taking into consideration the COVID-2 situation, for Q1 of financial year 22, we have already made 500 crores floating provision, so that in the Q1, wherever and whenever there is a requirement for provisioning, this 500 crores will take care. Apart from this, we have already made about 494 crores of provision for the OTR accounts, which is still there to be utilized. And to take care about the future provisions under fraud accounts, especially the frauds which we declared in Q2 of financial year 21 and Q3 of financial year 21, this quarter we have made an additional provision of about 670 crores. So as far as provision is concerned, for the coming quarter, we have created some buffer.
Looking actually at the ground level, what is the kind of slippages as well as provisions that you actually expect over the next few quarters due to this second wave of COVID-19?
Our estimation is for the whole year, we are expecting on a higher side slippages maybe to the tune of 14,000 crores to 15,000 crores. And recoveries also will be equal to or more than the slippages. Q1, we are expecting about 4,000 crore slippages will be there, and equal amount will be in a position to recover. Last year, if you see our gross NPA, in spite of COVID wave 1, we have reduced by 1,000 crores. So I think it is a challenging time. However, since the people who are working from home, they are given the task of contacting the borrowers, explaining them about the repayment schedules, and also wherever they require additional facilities, we are providing them. And we can control our slippages to the extent of about 4,000 crores in Q1 of FY22.
Mr. Prabhakar, any particular segment from the loan book that is being more impacted this time around on account of the second wave of the pandemic, and any particular state where there is a particularly difficult time in terms of collections and in terms of NPAs that you're witnessing?
We have analyzed the slippages, and we observed that the slippages now it is coming from retail segment. A portion of about 20 to 25% is coming from agriculture, about 30 to 35% is coming from retail, and another 30% is coming from MSME. Corporate, as of now, we don't see any big accounts slipping.
Now, Mr. Prabhakar, quite a few PSUs have started raising funds via QIPs. Would we see any capital raising done by Canara Bank, as well as the high provisions would require more capital to buffer the capital adequacy ratio, right?
As on date, our CRAR is 13.18% and Tier 1 capital is at 10.08%, which is sufficient to take care about the regulatory capital requirement and also to some extent the growth capital. But we need more capital for having a significant growth. For that, next week or maybe in 10 days, we are having a board meeting wherein we will be discussing how much capital has to be raised and what are the modalities to be adopted. And I think last year, the way in which we have raised the capital and the way in which the investors have shown their faith in this bank, and with the present results and the strong balance sheet, I think we will be in a better position to raise the capital in the coming years.
Mr. Prabhakar, due to the second wave of COVID-19, do you actually expect to grow slower in FY22? And also, how do you see credit as well as deposit growth shaping up?
As far as the FY21 is concerned, we have a decent growth in retail. Retail, we have grown at 12%. Housing, we have grown at 15%. Agriculture, we have grown at 17%, and RAM sector has grown at 11%. So as far as retail is concerned, which is our focus area, the growth is satisfactory. And the percentage of retail in the total advances has increased to 56.24%. So this itself shows that we are concentrating more on retail, and retail growth is decent. Going forward also, we'll be in a position to maintain this growth as far as retail is concerned. Corporate, yes, depending upon the situation in the future and the impact of the COVID, I think the growth under retail sector, under the corporate sector will be finalized. However, as far as health sector is concerned, we are focusing on it and we are planning to disburse about 4,000 to 4,000 crores in the short period.
Mr. Prabhakar, is there some margin impact in Q4 as the net interest income has actually dipped on a quarter-on-quarter basis? Also, what kind of recoveries you expect over the next 2 quarters?
As far as margins are concerned, ma'am, if you see our NIM, last year, that is FY20, it was 2.51%. This time it is 2.75%. And as far as NIM is concerned, I think we are comfortable because the cost of deposits we could manage at 4.52% as on 31st March 2021 compared to 5.42% previous year. And yield on advances, as on date, we are at 7.73. So 2.75% NIM in the present conditions is, I think, we are targeting for that, and we will be in a position to achieve it. Second point is our margins will be taken care by reducing our cost of deposits and also interest expenditure and operating expenditure also. So these things, I think, will help us in maintaining a decent margin.
Mr. Prabhakar, especially on account of the current context with the pandemic, digital seems to be the way to go, and digital integration, in fact, is inevitable. How much of your business collections, payments, and customer onboarding has moved to the digital channels?
See, in the last 1.5 years, our focus is more and more on doing digital transactions and digitizing the processes. Today, all the decisions what we take in the head office or in the circle offices, they're almost through digital mode. And also now we are educating our customers to use more and more transactions through digital mode. And I think our bank is one of the banks where we have surpassed the digital transactions target given by the Government of India. And even BC channel, the transactions through AEPS is increasing. And as on March 21, the PCs have done about 5.92 crore transactions in our bank.
All right, Mr. Prabhakar, thank you so much for taking the time and for taking us through the results and also the way forward for the bank. On that note, we're taking a short break, but on the other side, we'll get you the high risk and low risk ideas from my experts, and we'll also take live queries. So do stay tuned.